Good morning, good morning, good morning. Happy Monday. Here is Michael Brown. Inviting Michael Brown. Hope everyone had a very good weekend. Is he there? I think he is. Good morning.
How are we? I'm very well. I'm moving up in the world. I've been allocated my own meetings calls. I know.
Yeah, it's a sign of the times, mate. Sign of the times.
Well, no, what it's a sign of is that no bugger wants to come into the office on a Monday. The room is free, but I shan't rant about that
this
too much.
Yeah, this keep the illusion going, right? Okay.
Well, I did see a survey this morning actually that was saying that Generation Z, the youngsters, apparently the most likely to come to the office.
Michael, you do remember how old you are, right?
Yeah, I'm not part of Generation Z.
Are you not?
Just.
Okay. I'll take your word for it. Well, anyway, moving on. Quite a bit. We've got a busy.
Well, do you want to do your disclaimer?
That would help. One sec. I'm getting good at these. As always, nothing discussed on this Spaces session constitutes trading or investment advice or infers anything by PIQ Global Limited, trading as PIQ or its affiliates, including the host, Michael Brown, and myself, Ryan P.
Thank you, mate. Right, we're safe now. Good morning, all. Happy Monday. As you said, there was quite a lot of news flow over the weekend, although thankfully most of it in the geopolitical sphere, which means I can safely leave that to your capable hands. In any case, it was a positive end to the week last week for equities, the S&P 500 and the Nasdaq 100, ending Friday around about 1% higher. Although it is, of course, worth bearing in mind that the S&P 500 did, however, notch its first back-to-back weekly declines since April, despite pairing some of those weekly losses on Friday. Outside of the equity space, it was a relatively muted session. We did see some demand across the Treasury curve, with 2s and 10s both ending the day around 4 basis points lower on a yield basis, trading back under 4.4 and 4.2% respectively. That rally in Treasuries did allow gold to gain a little bit of ground, ending the day around 1% higher, albeit closing the week below what is, I suppose, important psychological resistance at $2,400 an ounce. Crude was also a touch softer on Friday, down around 1.4%, but still closing north of $77 a barrel, while the FX market did absolutely nothing on Friday. It was like watching paint dry. The dollar index stuck between 104.25 and 104.45 for the entirety of the day, with no G10 currency moving more than 0.2% against the greenback. That was largely by virtue of the fact that the core PCE figures came pretty much in line with expectations, with the core PCE deflator rising 0.2% on a monthly basis in June. The year-on-year print was a little bit hotter at 2.6%, although that was unchanged from the prior metric. And when you look at the annualized core PCE rates, the 3-month annualized core PCE figure is now at 2.3%, which I think most people would admit is just a mere rounding error away from achieving the Fed's 2% inflation target, and adds to the body of evidence pointing towards the Fed, or the FOMC, I should say, having the confidence that they need to deliver a rate cut probably as soon as September, action that they are likely to hint at their meeting this week momentarily. A few other bits and bobs from Friday. We also had our final read on consumer sentiment from the University of Michigan. That index was revised up in July to 66.4 from a prior 66. And then in terms of news flow, there was some more BOJ sources on the wires. Of course, we have a policy decision due out of Japan on Wednesday morning. Those BOJ sources were primarily involving the Ministry of Finance, who are said to want the Bank of Japan to cut bond purchases very, very gradually. Of course, the Ministry of Finance are incredibly worried, should we say, about the BOJ stepping out of the bond market, because, of course, it may pose trouble for them issuing debt as we move forward. And last but by no means least, there were some reports late on Friday that Apple, and this is tech news, so I've got no idea what it means, but apparently Apple are doing a software update soon called iOS 18, and some of their AI shenanigans and upgrades that they've been trailing quite a lot lately are not going to be ready in time for that software update about a month. So that is pretty much it in terms of Friday. But as you alluded to, there has been plenty of geopolitical goings on over the weekend as well, which are very, very important to bear in mind.
Indeed. So geopolitical headlines, as always, from our friends at News Squawk. started, and unfortunately there was a rocket attack that hit Israel in Golan, which was launched by Hezbollah, killing a dozen children and injuring many more, as you would expect. Israeli PM Netanyahu has said that Hezbollah are going to pay heavily for the rocket attack, and basic headlines and quotes from all sides, Israel, Hezbollah, the US and Iran stepping up, obviously anticipating this major retaliation by Israel. We've already seen a strike deep inside Lebanon by Israel, and the feelings are we're going to see something akin to what we saw when Israel retaliated against Iran. So it could be like a massive one and done, which we don't think we've seen yet. So all eyes on that front. Obviously, as we know, it's this kind of opening of a front in Lebanon that is a big, because that's more likely to drag Iran into developments, although it's very easy to make the argument that Iran are already involved in developments via proxies. But yes, that's the main thing we're watching in terms of the Middle East at the moment. Moving away from the Middle East slightly, we've got Russia note of US and German plans to launch missiles in Germany, and noted that important Russian facilities will be in range of those US systems, and warned that Russia will take similar action, longer range missiles, tit for tat. Russian Defense Ministry said its forces have taken 2 villages in Ukraine's Donetsk region. We've got US and Japan expressed concerns Russia will undermine regional stability by giving North Korea WMDs and missile technology, while they are concerned about the rapid expansion of China's nuclear arsenal. And
can you just ask that seagull to put a sock in it?
I know, mate. It's the two ones that are on the neighbour's roof that are kind of waking me up at 4 o'clock every morning. It's really not good. I'm tempted to buy a little air rifle. Said that one.
Or a slingshot.
So basically, North Korean WM is where we're at. And expanse of China's nuclear arsenal will advance talks a high priority effort to expand cooperation buying for air. Basically, there's been quite a bit over the weekend with Japan and US kind of setting up this command. I think US Second Command, basically US solidifying their kind of their command structure, which is based in Japan, which this also leads through to away from their decades-long passive agreement where they can actually now start buying more aggressive weaponry. It's one of those things. It's an evolving situation, shall we say. Looking a bit further afield again, not China. China Evergrande New Energy Vehicles said that some creditor subsidiaries applied for court for their bankruptcy reorganization. So, everyone loves a China Evergrande new vehicle or new energy vehicle headlines. Some of those
evergreens.
Oh, there we go. Oh God, well done. Oh, we got 8. Quite proud of you. What else? We got some Brexit Starmer saying reduce barriers and stuff like that. We've also got trade. Seeing UK ports are demand company post Brexit trade barriers reduced after they were forced to spend millions of pounds building. Is only fair. But we are seeing some trade between UK and Germany starting to recover post Brexit decline, which showed that UK was Germany's 9th largest trading partner.
And the FT reported that.
Well, this is why I thought it was noteworthy, because if the FT are saying it, then obviously things must be looking up. But yeah, I think Venezuelan President Maduro won a 3rd term. There's already been some kind of questions about the validity of voting. Think of Labour in Tower Hamlets vibes. Say that. But obviously there's as we all know, US have had some embargoes on. Be interesting in the US, how these elections went, because if they aren't, then there's more likelihood that they will start restricting the oil outflows from Venezuela. And Venezuela desperately need to legitimately export oil, which at the moment they're obviously some, but through their dark. And that's pretty much, I think that's pretty much it.
Cool. Good stuff.
I'll tell you what, just for Cam, there's a crypto headline. So Republican presidential candidate Trump said he wants crypto to be mined and made in America, while he will create a national stockpile if elected. So, maybe it's true. Maybe he is doing that because he actually believes in it, or maybe he's doing it because he knows there's a lot of money in crypto, there's a lot of votes in crypto. I'll let I'll let you decide which is which, but he's not as stupid as he makes
it. No, absolutely not. And he's being advised by Imagine. Cool. In terms of today and the week ahead, then there is a hell of a lot going on. Completely honest with you.
I was about to say, do we need to book out like about a 30 minutes show on Wednesday morning, because there's a lot going on Wednesday?
Yeah, I think we might, to be quite honest with you. But let's cross that bridge when we come to it. In terms of today, it does feel a little bit like the calm before the storm, and it is going to be a hell of a storm as we move through the rest of the week. One thing that is worth bearing in mind today, though, amid the lack of of important data releases and actually the lack of major pre or post market earnings is we are due to hear from the Chancellor here in the UK, Rachel Reeves, sometime this afternoon, probably around about 3:30, 4 o'clock, although that timing depends largely on what other events are going on in Parliament. This speech has been widely trailed in the media over the weekend and in press reports this morning. And the essence is that Rachel Reeves is going to stand up in Parliament and proclaim that there is a £20 billion quote unquote black hole in the UK public finances, which miraculously she did not know about 3 weeks ago before she got the job. But as soon as she turned up at the Treasury, things were so much worse than she thought, which is, of course, well, exactly. I was going to say, of course, one, that is complete and utter nonsense, because we have the OBR, whether you like them or not, the public finances are pretty open in the UK. And secondly, this was obviously what Labour were always going to do, run a campaign promising not to raise taxes, get in, it's worse than we thought, blame the other guys, it's so bad, we're going to have to hike taxes at the budget, and we are going to hear when the budget will be in this speech this afternoon. It cannot be before the 20th of October because the OBR need 10 weeks to come up with their economic forecasts, but it is likely that the budget will come in late October, and of course that is likely tax hiking budget, although it is interesting that there was a report in the City AM this morning that the Treasury have refused to deny plans to hike capital gains tax as soon as today. Now, I'm not a legislative expert, but, well, quite. I'm not entirely sure whether this is the wording of the article that's slightly out, whether this is the Treasury sources they're using, issuing a kind of non-denial that's not quite specific enough. But it is just something to keep on the radar, because obviously that would, be one of what now appears to be many nails in the coffin of investment here in the UK. So do just bear that one in mind.
I would almost go, like, to be honest, I wouldn't bet against it. So
No, nor would I. So do just bear that one in mind, of course, later on this afternoon. Anyway, in terms of the rest of the week, if the UK still exists by then, or we still have any money, which is looking dubious at the moment, Tuesday, let's just go through day by day because there is so much going on. On Tuesday, we have the first reading on second quarter GDP out of the Eurozone. The Eurozone economy is set to have grown by 0.2% in Q2 compared to a prior 0.3%. We also get inflation figures due from Germany, which will be a useful leading indicator for the Eurozone-wide figures that we get on Wednesday. And last but by no means least, we get job openings from states. They're expected to have fallen to 8.06 million for a prior 8.14 million in the month of June. Of course, that data referencing June, so it isn't the best leading indicator for the jobs report on Friday. Earnings also kick off in earnest on Tuesday. This is the busiest week of Q2 earnings season. Around 40% of the S&P by market cap set to report this week, including 4 of the Magnificent 7, and we hear from Microsoft after the market close Tuesday.
What's the one that we hear from today?
McDonald's.
What do you think about that one?
Well, it could be a nothing but.
Oh, there it is.
You never know.
Mate, see, look, you got that. I need a beer for that one.
You did. Well, I was going to buy you a beer on Friday, but you ran away. Anyway, moving on to Wednesday, which is by far and away the busiest day of the week, although it is a hotly contested honour, that one. We start Wednesday with a policy decision out of Japan. There is some division over whether the BOJ will deliver a rate hike or not. The market pricing around a 70% chance of a 10 basis point rate hike, and economists are pretty much evenly split over what the BOJ will do. We're also expecting the Bank of Japan to outline plans to taper their bond purchases, which will be of particular interest. No, don't do that. But those plans will be of particular interest given how much of a significant player in the JGB market the BOJ has been, pretty much forever. Also on Wednesday, before we wake up here in London, we get the second quarter inflation figures from Australia. these are going to be very closely watched. CPI expected to move higher to 3.8% for a prior 3.6%. Of all the G10 central banks, or well, really G9 central banks, because I'm taking Japan out of this for a moment, the RBA are by far and away the one who have displayed the most inclination to deliver another rate hike. Progress on inflation in Australia has pretty much stalled, and you would expect that if we do get a hot Q2 number, because of course inflation figures only come out quarterly down in Australia, then you would expect that that will solidify expectations for an RBA hike either at the August or the September meeting. Moving through the rest of Wednesday, we also get inflation from the Eurozone. Headline inflation expected to have held steady at 2.5% on an annual basis in July. Core expected to tick down to 2.8 from a prior 2.9. A few other bits and bobs to bear in mind on Wednesday as well. We get the ADP employment figures, which are useless for predicting Friday's non-farm payrolls number. We also get GDP from Canada. But by far and away, the most important thing on Wednesday is, I would argue, the FOMC decision. Although we are expecting no change to interest rates from Powell and co. this time around, we are likely to see some pretty strong signals that a rate cut is on its way at the next meeting in September, and the market prices around about a 102% chance, so slightly over a 100% chance that the Fed do indeed deliver a cut at that September meeting. Also, on Wednesday, on the earnings...
This is obviously Fed fund pricing for people that aren't fully aware.
No, that's OIS pricing, but it's basically...
Got you. So if OIS pricing is doing, like, say, 102, obviously, is that because there's almost the tiniest of chance that there's more of a chance by a fraction of a 50 basis point cut than no cut? Would that be what
yeah, correct. So I think the curve is discounting like 26, 27 basis cuts for September, which is why you get slightly over 100%. Yes. Also on Wednesday, on the earnings slate, we hear from Meta after the market close, and a few of the chip makers as well, ARM Holdings and Qualcomm, reporting on Wednesday too. Thursday is almost just as busy. We get a whole host of manufacturing PMI numbers. Perhaps the most important to watch will be the ISM manufacturing gauge out of the United States. That's expected to tick higher to 48.8 from a prior 48.5. Also on Thursday, we hear from the Bank of England. Arguably, this is the closest BOE decision and the toughest BOE decision to call in some time. The market is pricing an exact even chance between a 25 basis point cut and the BOE leaving rates on hold. My gut feeling is that they do deliver a 25 basis cut, and the sell side consensus does lean marginally towards that 25 basis point cut. But either way, I think you are going to see some fairly significant volatility in sterling assets, because the market's got absolutely no idea what the BOE are going to do.
It's one of those old, traditionally live, no one knows really. Great.
Indeed, and I think we should get a pretty chunky move. We also obviously get the latest economic forecasts from the BOE, which I'll let you decide whether they are worth the paper that they're written on. And of course, we will have a press conference from the Governor, Andrew Bailey, as well, to hopefully explain whatever decision they make, or to muddy the waters even further. Again, on that one. And of course, it is a big day of earnings on Thursday as well. After the close, we hear from Amazon, and we also hear from Apple as well as Intel on Thursday too. And as if that wasn't enough, there is still a few bits and bobs to come on Friday. We've got inflation figures due from Switzerland, where CPI is expected to remain towards the bottom of the target range at 1.3% July. And then, of course, the big one, the latest employment figures out of the United States. Headline non-farm payrolls expected to have risen by around 180,000 in the month of July. Unemployment set to have held steady at 4.1%, and average hourly earnings expected to have ticked higher by 0.3% on a monthly basis. Of course, there have been increasing signs of fragility in the labour market of late, so we'll be paying very, very close attention to those jobs figures on Friday afternoon. And, well, I may be speaking for myself here, but hoping for there to be no real surprise in those jobs figures, because after a week like that, I think we're all going to be desperate for a beer about 25 to 2 on Friday afternoon.
Which means
Well, you won't be. I will be. But it does mean that there is going to be absolutely no focus whatsoever on the factory order we get out of the US. So a very, very busy week ahead. And I think, as you alluded to earlier, Ryan, we may struggle to keep these calls to 15 minutes throughout this week.
Well, yeah, but more is good, right? More is good. When the show's as good as ours, more is good.
Exactly that.
Right. Well, thank you so much for today, for being awesome, guys, listeners. Thank you as always for listening in. If you are trading, keep it tight, and we will see you all tomorrow.
Indeed. Thank you, guys. See you later.
See you. Bye.